Good morning, good afternoon, good evening, everyone, and welcome to another FP&A Trends Webinar. My name is Larissa Malnichuk. I'm Managing Director at FP&A Trends Group and International FP&A Board. Today, we are going to look at the subject that is key and so high on many people's agenda. It's managing profitability in uncertain time. Today, we have a lot of attendees from different parts of the globe. I can see the statistics, and we have over 500 registrations from 60 countries around the globe. Welcome to FP&A Trends Webinar. Now, very quickly about the agenda. Only 1 hour, but we have a very interesting agenda. We will look at the latest developments in profitability management. We will look at the profitability analytics framework. Then we will look at the case study of Revere Health on profitability management and what is the role of technology in making sure that profitability is managed properly. We will have time for conclusions and recommendations, and of course, for Q&A session as well. Let's move on, and now this is a great time to see our panelists. Again, international panel, I would like to ask all our panelists to switch on the cameras. Hello, everyone. Again, we are meeting cross-Atlantic from different countries and, of course, North America as well. Quick introductions of our unusual panel, unusual from the point of view that we have a representative of academia, a representative of business practitioner, and, of course, analytics thought leader as well. First of all, Monty Swain, who is Professor of Accountancy at Brigham Young University, based in Utah, United States. Not only this, he is acting Deloitte Professor at BYU School of Accountancy, a qualified accountant with many accounting bodies and with past experience as a CFO as well. He is leading expert on the strategic performance management models and balanced scorecards. Senior author at exam preparation system for CMA, and of course the biggest one of the passions is profitability management. Monty, welcome.
Hello, Larissa. It's wonderful to be with you.
Thank you so much. Now a representative of our practitioner, senior practitioner from Utah, United States, Robert Ikmat, who is Chief Financial Officer at Revere Health. Robert has more than 20 years of experience in various healthcare finance companies, and he's currently responsible for the whole P&L, FP&A systems, processes, policies, and staff. And he's expert in mentoring and developing finance leaders and staff. And obviously, the way how to manage profitability in this company, it's amazing. And Bob is going to share with us his case study. Bob, you're welcome.
Thank you for having me. It's good to see you.
Welcome, thank you. And now our European representative, Michelle Hazendalk, who is a global solution owner and financial planning and analysis at SAP. You've seen Michelle at a number of webinars, so he's a passionate speaker for FP&A Trends and many other platforms as well. Michelle is joining us from Belgium, and he has over 25 of experience as an external auditor, controller, and former CFO as well. He drives innovative projects for finance and performance management at SAP, and he is the expert in the area of FP&A analytical transformation. So we've done a lot of interesting work together, you know, to look at this at thought leadership and innovation. And he's author of some of the books, including this one on SAP HANA. Michelle, welcome. Glad to see
Thanks for having me again. I'm looking forward to the discussion today with, of course, Monty and Bob, yourself, and also the other people on board.
Well, welcome our panelists. Now it's time if you can switch off your cameras just for a moment, because I have a number of very general slides for us to go through. Just a quick introduction of myself, my background. As I said, Managing Director of FP&A Trends Group and International FP&A Board, former practitioner by myself, qualified accountant, certified FP&A professional. With International FP&A Board, I traveled to 27 cities, 16 countries, Those are the names. And our FP&A Trends online resource is there for you for education. And just recently, we started also our advisory and research projects as well. Now, just a little bit about this webinar. So it's 1 hour. There will be 2 polling questions. Please, you're welcome to participate. We would like to hear from you. There will be interactive Q&A session at the end, and you can start asking the questions straight away when we start speaking. And it's easy to do via chat box. Presentation is available in handouts, but also you will see this on your screen. You will receive the recording of this session within 2 days. And of course, after the meeting, we will have survey, and we would like to hear how we can make it better and what is your feedback on this. Before we start, I would like to say thank you so much to SAP for sponsoring this event. Thank you so much for being our sponsor. Very quick introductory slides before we start to look at the subject from 3 different points of view. I really like this quote about profitability management. So Michael Porter, the classics that we all know him. If your goal is anything but profitability, you'll hit problems. As finance practitioners, obviously as qualified accountants, many of us, we know the definition of accounting profitability and management accounting profitability. But at the same time, just a quick reminder that profit, especially accounting profit, it's not exactly equal profitability. And just a quick reminder about those leading companies that aren't profitable with their accounting statements, but actually quite well known and leading, and those famous companies that managed to go from profitability to bankruptcy and even non-existence. So from this point of view, profitability, it's not only our revenue minus cost, and not only at this particular level. And all of us know about this. There are so many different aspects of profitability, so many dimensions. And in our Managing Profitability in Uncertain Times paper, we go in more details. Actually, this is our research, which is based on so many FP&A boards around the globe. But just a quick reminder to you that obviously, a huge subject is revenue management, cost allocation and cost management, cash flow and capital. But at the same time, a very big dimension of profitability management is business acumen and process. It's life cycle of products. And of course, this is the portfolio of your products that could be at different life cycle stages. It's understanding the business drivers in order to model it. So in reality, those 7 dimensions, there are many of those, but in our paper, we look at this. It's a great framework. And now, just some of the survey results. We know from our 2021 FP&A Trends survey that profitability management is high priority at the moment. 60% of our respondents, they said that product profitability is high on agendas. 49% of our respondents, they said customer profitability. And 60% said that profitability for strategic decision-making, it's a huge subject at the moment and huge priority for their companies. So let us start. Let us look at the modern concept of profitability in this incredible uncertain time. And let us look at this from 3 points of view: academic, practitioner, and technology. And the first one is from academia. So I'm inviting our first speaker, Monty Swain, professor of accountancy at Brigham Young University. Monty, you're welcome.
Thank you. It's wonderful again to be here with you and with my good colleague Bob and with Michelle. Looking forward to sharing a little conceptual academic background here. So hold on. We're going to start with a little bit of history. So I want to talk with you about the Dupont return on investment model, which is on the slide coming up right now, and tell you about a very interesting time in 1914. A young professional named Donaldson Brown was running the general staff office, supporting the executive team at the Dupont company. Now, Donaldson was not supposed to be in charge of the office that summer of 1914. But his boss, the executive staff director, was sick that summer and was forced to put this young man in charge. When Coleman Dupont, the president of the Dupont company, one of the biggest companies in America at that time, asked for an executive report on the operations of the entire company, young Mr. Brown saw his opportunity, walked into DuPont's office and presented to him the return on investment model, which computationally is an extremely clean way to think about how we achieve the return on investment that is important to many organizations. It's a function of two mathematical ratios, the investment turnover ratio multiplied by the profit margin ratio. And as you'll see on the next slide, this model expands into a lot of computational detail. So let's go to the, and you can see here that the investment turnover ratio, sales divided by investment, and the profit margin ratio, profit divided by sales, starts detailing out into a lot of computational components. This became the focus of management at the DuPont company, subsequently at the General Motors GM company, and then expanded to more and more organizations since then. By the 1950s, the DuPont company had a huge room dedicated just to this model with many poster boards and charts that were moving around this room under lock and key. Using this model, the DuPont framework, the DuPont model, the DuPont company could drill down on each individual item that computationally contributed to return on investment. Most of you are familiar with this model, I'm sure, and it's got an interesting history as a background. This model, if we look at its core components on the next slide, you'll see that it is the drivers of return on investment are three factors: sales, investment, and costs, with sales being spread throughout this model. Interestingly, since 1914 and the arrival of this model in front of Mr. Dupont by this young staffer, accounting and finance professionals have tended to focus largely on managing investments and costs, with sales and revenue management being acquiesced to other professionals in the organization, professionals in marketing and sales who know a great deal about this, but without the full partnership of accounting and finance professionals in many organizations who can bring to bear their special skills and prowess in analytics and control and system features. This model became very interesting to an organization that debuted a few years ago called PACE. You can see that down at the bottom of this slide, the Profitability Analytics Center of Excellence. This model we see as originally as a computational model, but we are interested in what causes sales, investment, and cost to move in the directions we want. It's not strictly a computational issue. On the next slide, we see this as an interaction, an integration of revenue that affects cost, cost that affects revenue, investments that drives both revenue and cost, and profitability and the analytics around causal factors of profitability sits at the center of that intersection, at the center of that Venn diagram. Considering this from a strategic point of view, we are able to build what we call the Profitability Analytics Framework, which is an expansion of the ROI model. And that framework is composed of these three factors: revenue, cost, and investment, spread across the three steps of strategic development. Next slide, please. So there are the three ROI factors. Strategy forms across three different stages. First, we're formulating the strategy by capturing analytics, both internal and external, to set strategy. And then we need to quantify that strategy into measurable aspects, both non-monetary and monetary aspects that define what we mean by revenue strategy, cost strategy, investment strategy. And then we need to execute that strategy and harvest the value that's created. And then the whole process starts again. These six factors then combine into a fairly comprehensive model that integrates across different stages of strategy and integrates across these three ROI factors. We're looking for causality. And here is that model. We call it the PACE Profitability Analytics Model on the next slide. You can see, if you've carried forward visually the previous slide, that we've got revenue, costs, and investments coming vertically down this framework, with strategy formulation, validation, and execution coming across horizontally. I'm going to walk you through this model in a building approach, starting with strategy formulation. So this is the core of the model, but I'm going to expand it now into more of its components. And we're watching for causality as a connective way through these three frames, down these three ROI factors. So on the next slide now, you'll see the strategy formulation framework being emphasized, with internal and external data used to forecast, plan, and capture actual factors related to formulating the marketing strategy for the organization, the core strategy. That strategy then informs the operational strategy, how we structure the organization, with the investment strategy put in place to support operations and marketing strategic goals. Coming across now to the next slide, that strategy formulation across marketing, operations, and investment then forms a causal set of models. What is the causal quantitatively? What causes the marketing goals to be achieved? What are we looking for? What levers are we going to start maneuvering? What are the operational models and their causal factors, and the investment model? These are non-monetary measures to begin with, but they need to be monetized. On to the next slide, as we continue to validate the strategy with causal models based on monetary measures. So in dollars and cents, or whatever the currency is for that organization, what are the fundamentals of driving revenue and managing costs and deploying investments? We capture and frame this in monetary measures. And this is where accounting and finance professionals are most clearly involved, but they've got to understand where these models are coming from, how they're based, how they're formulated. Moving on, then, we execute this strategy on the next slide. With this strategy execution, we are deploying our revenue model across products, services, customers, channels, strategic business units, whatever it is that describes the specific monetized strategy for revenue in that organization. We track and manage costs across processes, activities, and cost drivers. And we are tracking on not just the traditional tangible definitions of investments and assets, but the intangible assets, the intellectual property, the HR capital, and other aspects that creates value, but is not formally reported on a balance sheet, needs to be captured and reported and tracked here. Finally, and I've run out of room on this slide, so on the next slide, you're going to see strategy execution. Stay there. And I've got one more step, and that step is the harvesting. As we harvest the value, tracking on revenue management and capturing value through the way we price and allocate inventory and services and configure the product and control our availability of our service or product, cost reductions, quality improvements, timely delivery of our operations, the way we are tracking on capital investments, our HR development values, our IP management. All of this is potentially levers that an organization tracks on. It's not computational. We're looking for causal relationships now in a way that we can model and track it and share this across the decision makers in the organization. Finally, on the next slide, you're going to see this last piece slip off just by virtue of the fact that we're running out of slide room. But all of this feeds back at the bottom with strategy evaluation based on what we have captured, what we've learned. That, of course, is a learning feedback. It loops back to strategy reformulation, and the whole thing begins again. This is not going to be surprising for many of you. This is generally how organizations that are successful are tracking on a complexity of many factors that need to form together for value creation and capture in the organization. The job of this is to frame it in a way that is comprehensive, integrative, and sensible, that can involve accounting and finance professionals into more aspects of strategy development and deployment. So this is the Profitability Analytics Framework. This was developed by the PACE organization, who I represent in today's webinar. On the next slide, I just want to point out the Profitability Analytics Center of Excellence, PACE, and invite you to come join us. We are a partner to FP&A Trends, performing similar kind of work at this very objective, a nonprofit organization composed of researchers, practitioners, and consultants like my colleagues here, who are working to better understand, develop, and deploy models of management to track costs and revenue drivers and performance measures deployed through investment structures. So that's the profitability analytics framework. I'm a couple of minutes over my time, I see, but if there's a comments or questions, I'd be happy to take those very quickly.
Monty, thank you so much for your excellent presentation. What a great framework for consistency, for analytical evaluation of different aspects of profitability. I would like to ask our panelists to switch on the cameras and very quick commentaries. And Robert, Bob, we'll start from you.
Yes, thank you. This is a very interesting model, and as we've applied this model within our own business, it's really provided some additional insights. And as Monty mentioned, we're familiar with many of these aspects of the model, but having it defined and expanded in this way is really helpful for us in looking for further refinement as to how we can manage the profitability of Revere Health.
Thank you, Bob. Michelle, what would you say?
Yeah, actually, it's funny to see that this is a model which is over 100 years old or young, but I would say rather old in this case. And let's say the last couple of years, I think we've had numerous discussions on, let's say, on driver-based approaches, which in a way can be basically brought back to this. Of course, with the complexity of the world, which is only increasing, I think, let's say, and we'll talk about that later. Let's say the difficulty, I guess, is, let's say, on how to make it indeed comprehensive and inclusive. The last points which Monty was pointing out to, I think that's something which we definitely should not forget, and that's probably the difficult part, not understanding the model. So
yeah, that is the challenge.
Excellent. Thank you so much, Monty. But now we would like to hear from our participants, and I'm opening the first polling question, and it's all about what is happening with profitability management in your company. I'm launching the poll, and as soon as you can, please start voting, choosing one of those aspects that are the most important one for your company. What aspect of profitability management are you most concerned about in your organization? Is it revenue management? Is it cost management? Is it investment management, or any other significant concerns you have? Please continue to vote. Just choose one of those: revenue management, cost management, investment management, or any other important aspect. Just a few seconds, and I'm closing the poll, and I'm sharing the results with everyone. Interestingly enough, but not surprisingly, 41% of you say that it's revenue, 48% say that it's cost management, only 10% is investment management, and 1% are other significant concerns. Monty, any commentaries from your side, please?
We have noticed similar responses in similar polls, both formally and informal conversations, that investment management tends to receive the least concern, not the least attention, but tends to demonstrate to be of less concern compared to the other two factors. One thought we've had over at PACE is that we are concerned ourselves that managers, particularly in the finance world, have been so educated in the accounting, regulatory, and reporting world about what investments are, historical measures of past purchases that have been depreciated and are limited only to those things that are tangible, that we've created for ourselves perhaps a world that is too narrow in terms of thinking about non-tangible, even more strategic resources in the organization that drive costs and revenue. Now, we could be wrong about that, and these conversations are continuing to happen. But investment management is what has to be deployed, not just what we purchase in terms of assets, but how we create resources has to be deployed that drives costs and provides revenue. It's the first starting point. So this is not surprising, but it is a curious phenomenon that we're observing.
Absolutely, and to be honest, I'm not because many companies still continue to manage their FP&A only from one accounting statement, profit and loss account, forgetting about cash flow and connecting balance sheet as well. So it's all connected. Thank you so much for all your votes, and thank you for commentary, Monty. And now this is the time to look at the practitioner point of view on profitability management. I would like to ask Bob to switch on the camera. And this is an amazing case study from your organization, Revere Health. Amazing to see how the good process and also business acumen, understanding the consistency of model, how it's really created this interesting process and very successful one. Bob, you're welcome. The floor is yours.
Thank you. Can you hear me okay?
Yes, it's all good. We can hear you.
Very good, thank you. Hello, everyone. Again, I'm Bob Ikmat with Revere Health, and we're delighted to have you here at the FP&A Trends Webinar. Like you, we're charged with helping our stakeholders better manage their performance and profitability, and I hope to share with you some of our own journey and insights and some of the things that we've learned. We have a rather large medical practice of about 400 clinicians, about 2,100 employees. We serve about 500,000 patients and render nearly 2 million procedures annually, and we generate over US 300 million in revenue every year. So years ago, we developed a system. It's a very sophisticated system which enables us to allocate revenues and expenses across multiple layers of our organization. The PA model that Monty reviewed has helped us refine the direct and also the indirect relationships between drivers and results. And it also helps us to determine the drivers of the drivers in our strategy. So revenue and expense drivers in healthcare, they're not often symmetrical. They're often asymmetrical. For example, some revenue drivers don't directly drive expenses, and also some expenses only indirectly result in revenue. Our system is based upon the allocation of shared revenues and shared expenses, in addition to accounting for direct revenue and direct expenses as you would traditionally expect. Our system enables our people and departments at every level to understand and manage their own performance and profitability. So let's go to the next slide, please. In this workflow that you see in front of you, this is the workflow that we employ in allocating both revenues and expenses. So you can see on the left-hand side where we have source data. Monty referred to it in his model as strategy formulation or inputs, where we have different sources of data, including clinical data, operations data, and finance data. And our team will then extract that data and manipulate it, whether it's through SQL or Excel or maybe a visualization analytics software package. We will then take, oftentimes in our strategy formulation, we'll have questions that will come up, and we will take and then analyze and build different models that have different sensitivity analysis or different weights for some of the different bases, and we'll develop some models in conjunction with our stakeholders. And from that modeling, then we will develop proposed rules of how we will then allocate particularly shared revenue or shared expenses. And then we will document those rules. Every documentation of every rule set then requires review and approval by various stakeholders, whether it's a small team of physicians or at the enterprise level, whether it's our governing bodies. So they will then review and approve those rules, and then once they've approved that, we will then program those rules into our automated systems, as well as then archiving them for later reference in the event that we need to go back and reconstruct a set of rules as they existed at that time. Once programmed, those automated systems enable us to generate a range of financial reports or operational reports, which are very helpful for our stakeholders to understand where they are in the performance of their systems. And what's unique about our system is that we actually generate over 800 P&Ls every month. And that P&L really provides us with a level of granularity that our operators are able to apply then in managing the profitability of their organization. Most of our revenue, for example, is fee for service, meaning that we're paid on a per procedure basis. We also receive capitation payments, meaning fixed fees, to provide a range of services to a patient population, irrespective of the procedure volume. And we also receive incentive payments for achieving certain quality goals. Fee-for-service is direct revenue, which is typically credited to the physicians or the clinicians who perform the procedures. Capitation and incentive payments are shared revenue, which must be allocated among those who actually contribute to generating that revenue. Physicians also incur direct expenses in their practices, but they also incur shared expenses, which must be allocated. And some of those shared expenses may be shared staff, shared campus and office space and equipment, or even corporate G&A. Expenses at every level must be allocated to lower levels, and understanding the drivers for each revenue or each category is vital to how we allocate them. And the PA model is, again, an excellent framework for helping us do this. We manage capital investments of $5,000 or more with a return on investment, internal rate of return, and payback period analyses. And once each investment is approved and placed into service, the depreciation is then allocated to the appropriate cost centers. And as I had mentioned earlier, this system enables us to model and then automate the production of over 800 P&Ls across every level of Revere every month, and those P&Ls are used by managers and individuals to get the feedback on how they're actually performing, and it helps us create a culture of autonomy, entrepreneurship, and innovation. So let's go to the next slide, please. On this slide, you can see where we have different levels of our organization, and you can see where we have revenues as well as expenses. Just kind of walking through this, the first three layers, enterprise, specialty groups, and ancillary departments, those are enterprise-wide levels that we look at. And we do have system-level shared revenues as well as provider-level direct revenues. And then we have system-level shared expenses, in campus and clinic level shared expenses. The provider level also has direct expenses. And then you can see ancillary departments and then mid-level providers. Each of those levels actually have their own P&L, which net results are then allocated to the physicians. And the PA model has been excellent for having us just evaluate where in the system we have opportunities for improvement and clarification. Ultimately, all revenues and expenses flow to the physicians, as you see down on the bottom of the slide, in the form of net income, which is how our physicians are compensated. This system is very different from how most U.S. physicians are compensated. Our system ensures alignment and accountability at all levels while enhancing physician autonomy. And since all allocations must be approved by stakeholders, the PA model also helps us provides a framework for helping us in their review and approval of whatever the allocation model is. So managing profitability of a complex enterprise requires understanding of drivers and the drivers of drivers. The PA model is very, very helpful for us in this. Some of the recommendations that we have, having our own experiences and then being able to apply the framework that Monty and PACE has provided, helps us. So one is we identify direct and indirect drivers using the PA model. And those indirect drivers may be upstream, for example, drivers. Determine which individuals and teams control those drivers. And then we develop a feedback mechanism or a reporting mechanism which enables individuals and teams to manage their own performance and profitability. And we provide that feedback to them on a monthly basis so they can see how their activity is actually affecting the performance and profitability of their scope of responsibility. And then finally, we align incentives across the enterprise based upon individual and collective performance. So that way individuals can see their own or as a team. And then one of the things that we'll have an opportunity to talk about here is leveraging technology to automate and shorten that feedback loop. Our experience is that change management is more effective when it's driven from the bottom up rather than from the top down. So that's our information. Thanks for letting us share this information with you, and we would invite comments.
Bob, thank you so much. Great presentation, and what an example to show how consistency and process and business acumen can make a difference. I would like to ask Monty to comment on this, please.
Bob, we've been talking about your wonderful organization for several years now, and I just continue to be more impressed about how much complexity you're managing. 800 profit and loss statements across 400 providers with 100 different service locations in the healthcare industry. It is striking, that level of complexity. You're tracking on a lot of aspects, drivers of revenue and expenses. I just got a quick question about investments. How you've said a little bit about, can you say a little bit more about how your providers engage with or even compete for investments in this profitability strategic framework?
Sure. It's a great question. So the investments, for example, capital investments for equipment or even new office space, those are actually originated by the administrators or the physicians at the level where they will be applied. And they partner with us in doing the ROI and internal rate of return investment. Obviously, we want to look at it, how it fits within the larger strategy, but ultimately we help them make the decision, because what will happen is once the investment has been approved and put into service, it actually gets applied to their own P&L. So they see very quickly the impact of the investments.
Fascinating. Again, so much complexity here. The way you've got this framed, it's impressive how well you're able to track this right to your front line.
Thank you.
I agree, and congratulations, Bob, on your amazing model and process. Michelle, just a quick commentary from your side, please.
Yeah, it's amazing indeed how such a lot of complexity is being managed, let's say, in an Excel-based way. Of course, with my technology hat, I think there's, let's say, potentially better ways to, let's say, do that. But yeah, that's a separate discussion, I think.
Yes.
Yeah, combination of all the factors is definitely a powerful one. Now we would like you to vote, and we have the second polling question. I'm about to launch the second polling question, and please start to vote as soon as you see it. So it's all about the technology that you use. So please choose the aspect that is the most important for you, or the best description of your technology right now for managing profitability. As soon as you see the poll, if you can start voting, please. Yeah. What is the technology? What is the main technology you use for your profitability management in your company? Select the one which is the best description. Is it Excel? Is it an ERP module? Is it a dedicated FP&A system or EPM? Or is it already integrated performance management platform that combines both EPM and ERP? Please continue to vote. Choose one of those. Is it Excel, ERP, EPM system, or integrated EPM plus ERP? More than 55% of you voted. Please just a few seconds closing the poll, and I'm sharing the results with everyone. I would like to ask Bob to comment on this. 54% is Excel, so what do you think about this?
Yeah, this is actually not surprising, but I definitely see where there's lots of opportunity. You know, Excel is a wonderful tool. It's a very wide open platform. It's very difficult to apply it on a large scale, if you would, or automating allocations, particularly the kind of things that we do. So we use it really for modeling, but the actual management, the rules are programmed into our automated systems. But yeah, this, as I said, is both surprising and not surprising, and I see lots of opportunity for improvement, both within Revere as well as for the FP&A professionals generally.
Absolutely. Thank you for your commentary. And Michelle, your very quick comment on this as well. So dedicated systems, 15%, but integrated platforms, 10%, 25% altogether. It's a great improvement comparing to the last 2 years. So what do you think?
Yeah, I think indeed we see an improvement. I would have expected Excel to really blow let's say the figures, let's say through the roof at 75% or something like that. I'm really happy in a way to see that actually, let's say 10% or around 10% of the, let's say, attendees already, let's say going into the direction of not just an FP&A tool or a BI system, but really, let's say, linking it up with their system of record. So that's funny to see. So that the evolution has basically started. Positive.
It started, definitely. Thank you, everyone, for your votes. Thank you for commenting. And now we are looking at the third aspect. we're looking at the third aspect of profitability management, namely technology. Michelle, this is your floor to demonstrate what technology can give us.
All right.
How we can manage profitability. You're welcome.
All right, thank you very much, Larissa, and let's say great movement with the, with the previous polling's question. I think because it's basically just let's say leading the way to what I'd like to share today with all of you. So let's basically I put together one slide where a lot of different elements, of course, through kind of technology glasses, of course, has been put together. Let's say if we look back at what Monty has been saying, if we look at, let's say, how Bob has translated that into his healthcare organization, actually some of the elements, if I try, and of course it's impossible to summarize some of the key elements which we need to tackle in order to really manage profitability in the right way, then it's basically coming down to aligning resources with business strategy based on the right drivers, whether it's indeed sales related drivers, cost related drivers, investment drivers, or even, let's say, other underlying drivers. So the drivers of the drivers, let's say that Bob was referring to. And I think, let's say, one key to success to make it all happen is to bring all of the relevant information together in a single harmonized data model, so that at least within your organization, you're talking all of the same language, and there's no discussion anymore on, let's say, who has the right information, whether that's monetary or non-monetary, by the way. Also have that access to that information in a very granular way, not necessarily the details of the details always. In certain cases, it might be very important. In other cases, it's not. But at least have the right level of detail which you need. And of course, that's not easy to do. Like we can't pull it all into a spreadsheet necessarily or on a piece of paper. So we need, let's say, advanced models there. Because actually, if we look at that data model, there's, let's say, this is getting more and more complex because companies are, let's say, broadening their lines. If we look at, for instance, retailers who originally were just retailers now have a web channel, let's say, to sell, or maybe, let's say, they're doing some in-house production or white labeling production, just as an example, right? If you look at the automotive industry, basically they're more going into subscription models. I heard, let's say, HP as an example, let's say, talking more and more about, let's say, printing as a service, which is, I think, a very well-known example. That basically the complexity is growing. So we need to really look across the entire enterprise, across different lines of businesses, across also different areas in the world, which also means that we might need to look into different valuation principles, not only from a legal, but even from a managerial perspective we want to have a look at. We also are going way beyond just the P&L. We already talked about it earlier on. Let's say the importance of the balance sheet is increasing vastly. It should have been important always, but let's say for many people outside of finance in the past, it's well, they didn't really necessarily look at it. That's kind of my personal look at it. And let's say looking at, for instance, the profitability by product, by customer, which was already addressed. You know, let's say even in a balance sheet, you might have, let's say, these dimensions which are very, very important. So we really need to, let's say, embrace this 360 view in order to really get those insights. And that's all nice and it's a good idea, but of course we need to make it happen. And let's say then of course everybody thinks, well, then we need to have this huge pivot table type of approach where I can drive everything myself. I can look, but I think, let's say, there's a lot of automation and transparency, automation capabilities which can help us in driving transparency, really locating and understanding the underlying business drivers. And I'd like to just basically pinpoint 3 elements because of course time is quite short today, but 3 items, starting with the first one, which basically I want to illustrate next. On the following screen, which is basically the fundament of it all. I'm making sure that I can bring all of the financial and non-financial information together, but especially the financials across any different dimension. And there I'm not talking about profit centers and cost centers, but really the business dimensions, my customer groupings, my product categories, my geographical subdivisions, that's whatever is important. If I'm, for instance, in fashion, maybe the color of this year might be very important to see how basically the modern color is driving success of my sales, as a simple example. Cross value streams, and of course not only looking at actuals, because what we really want to do is look ahead, predict, simulate, go through different scenarios. If we look at the 1.5 past years, I think everybody has been, let's say, struggling with that, one maybe more than the other, to basically look at different scenarios and how to basically we can rearrange the way we do business in for instance, COVID times. But of course, that's just an example. That's the first thing. And actually, we can deliver this today. And this little screenshot is just an example. A second element, which is basically illustrated next, is to go beyond, you know, the pivot table, so which basically is illustrated on the next slide. If it wants to come up, at least, yeah, is basically to really look into how we can link different pieces of the puzzle together in a transparent way, really linking these different drivers together. And probably everybody has heard about, let's say, this concept of a value driver tree. Let's say what is impacting, let's say, which other elements, non-monetary and monetary, basically looking back at the drivers of the drivers that Bob was mentioning. That's basically also just simply possible, not just looking at actuals, but again, being able to simulate on that. Another example of that is basically what you see at the bottom. Let's say if I'm a cost center owner looking at, let's say, understanding cost drivers and where costs are coming from in my little area of responsibility, everybody has experienced this for sure, is, let's say, there's a lot of, you know, management fees and other stuff which is allocated into my area of responsibility, and that stuff gets allocated out. How can I really make this transparent? That basically is what we see at the bottom. So that's really possible to do, not again for actuals, but really try to model this out and also use the same tooling for simulation activities. The third element is actually taking us a step further, which is basically coming up on the next illustration, which is, let's say, taking us yet another step further, because up till now, let's say in the first illustration, we were just having, let's say, our pivot table, and the second one, we basically were already looking at a model. But what if I could talk to my system like I talk to other human beings, right? Like if I ask business questions. And actually, that's what I would like to just briefly show you, because like, and let's say guide you through a very, very simple example. So if we go and start up this little demonstration here, yeah, exactly. So what I'm doing here is I'm asking for, as a simple example, my top 5 customers. I'm just asking that simply to my system. I'm not doing anything else. I don't have to slice and dice. And basically, the system is going back to my single source of information, pulling up the necessary data, and actually tells me, like, this is a potential way to show this. Then I can add, let's say, more details. For instance, in what area of the world am I interested in? Like, for instance, in China, in what particular date, what particular product category or individual product. And basically, again, there, let's say if I think, well, this is interesting, I want to have a more detailed look at it. Basically, the system is helping me to automatically create a certain visualization. So you see, let's say in the meantime, I'm creating a dashboard, by the way, just on the fly. And actually the application is just helping me to understand what's happening by automatically detecting top contributors in terms of region, in terms of currency impact, in terms of contract level, in terms of any other dimension that you might be interested in. I know this is just a very quick review, but let's say on top of the fact that we can use this way of interacting with our environment nowadays for actual purposes, I can also just ask it to basically, based on all of the data that I have, detect some trends and already try to predict or making a rough prediction of what might happen in the near future, which is basically just done by one simple click on a button. Of course, we all know we hate black boxes as finance professionals, And what I'm not showing here is basically that you can really impact the drivers and the elements which you want to plug into this predictive model very easily as an end user behind the scenes. Anyway, I hope this was, let's say, giving you some insight on, let's say, how we can really make connections between non-monetary drivers, translate this into figures without having, to be honest, to create 800 P&Ls, but have it a more natural way. So with that, I basically would like to end this little overview on how technology can really help us, but not before, let's say, adding one small additional thing. Because if we talk about profitability management, actually the title to my part of this session was sustainable profitability management. And I think everybody has been dealing with traditional financial reporting, which is here on the left, right? More and more we are integrating other pieces, and what more recently, basically also the carbon aspect, but where, let's say, really top-notch companies are trying to get to is really to understand what the overall impact on society is of, let's say, all of the SG&E elements, which are absolutely important. I can't imagine that Bob is not doing that in his health care environment for sure. Now, on the short term, of course, with an analytical platform, we can already do a lot. Our vision for the future, and I must say we're not there yet, is basically to integrate all of those SG&E and especially the carbon aspect into, let's say, the ERP system, into the operational system, and basically work from there to optimize the overall situation for the future. And with that, let's say I really need to end, and thanks a lot for your attention. Over to you, Larissa.
Michelle, it's a great demonstration on how technology can help with profitability management. And now, just before Q&A session, I would like quick commentaries from Monty and Bob, if you can join us, please. And Monty, starting from you.
Just fascinating to have you walk us through the evolving leading edge of technology, Michelle. I'm just being historical again. I'm mindful of Gordon Moore, more than 50 years ago, teaching us Moore's Law, that every couple of years, technology is going to get faster, twice as fast, twice as capable, half as costly. As managers, we are never waiting for technology to catch up to us. We are always running into the best next opportunity that technology allows us to explore the competitive, complex world that itself is getting twice as complex, twice as competitive every couple of years in this very flat world. So this is lovely to work in this intersection and this hour with you and with Bob to look at a smart organization, a smart technology. We need good models to bind it all together.
Absolutely.
I really, this is pretty impressive to see how we can take traditional financial reporting and actually start to project forward. So for example, Monty, you had mentioned about non-monetary measures as well as monetary. One of the things that we look at is how many patient lives are we caring for, but not just the care today, but what do we project will be their care in the next year, in the next 3 years, in the next 5 years. In order for us to be financially successful, we have to be successful not just in the current quarter. We have to be able to have sustainable success going forward. And these kinds of tools, I think, really, particularly the visual aspect of it, is really compelling to help managers and physicians understand where the business is, not just today, but where it's going.
Excellent. Thank you so much. Yes. Thank you, Michelle. Thank you for your commentaries. We're about to start the Q&A session. As a quick reminder and conclusion, today we managed to look at profitability management process from 3 different points of view, from academia, practitioner, and technology. Please continue to send your questions, and we are starting the Q&A session. Even if we don't have enough time to answer all of them, we will do this through email. So please continue to send your questions. So I'm starting the Q&A session, and Monty, the first question is to you. The question is, we lack cost management knowledge. What can enhance cost management and how to deal with this, Professor Monty Swain?
The question is, what can we do to enhance cost management, correct?
Cost management, yeah.
Well, I come back to Bob's comment. We need to understand the drivers of costs, and we need to understand the drivers of costs. That cost is, by its nature, complex. And so we have to have more than a simple understanding of what causes costs and whether those costs are good or desirable or not desirable. What we sometimes think of as good costs or good dollars and bad costs, and all the factors that feed into that. We need good models to track on that that are specific to the organization, not a general model that's coming from a textbook or a consultant's hotel seminar, but one that's inside the organization. And we've got to have great technology to represent that, again, in a unique way for our organization. Every organization has different structures of costs.
Thank you. Great answer, Monty. And the next question is to you, Bob. It's amazing model and process you described, Bob. What is the overall effort to manage this model and who needs to contribute? So how much time consuming and how difficult is this to allocate an approval process for your model? So Bob,
Sure.
you are...
Very good question. So I currently have a staff of 12, but frankly, what makes this possible is it's taken years to develop. But one is we have well-defined processes, and then once those rules are defined and approved, then we do program them into our information systems, so that way they enable us to scale to do this. But if we were to try to recreate this from scratch, it would literally take years to do it. But I definitely see where there are opportunities to better leverage technology that is now coming available that would enable us to actually extrapolate, even go and give us even better information to understand our profitability going forward, not just in the current quarter. But it takes a lot of work. It takes strategic forethought as to how you're developing a system to do that.
Yeah, if I may, Larissa, let's say comment on what Bob was just saying. I think, let's say, this model, I think it's crucial to understand, because let's say in the slides we showed, let's say, and we saw, it seemed like a kind of a static thing, but I don't think I've ever seen a static model, right? Like, say, I've also seen alternatives, and I think that's very important for everybody to understand. Like, you know, this is an ongoing exercise for sure. So this, like, once you start it, you need to, let's say, get it moving, because the world changes, your business model changes, and so basically the drivers underneath are changing, and so we really need to understand that. So finance professionals really need to go, yeah, not away from understanding accounting rules, but really understanding the business. So.
Thank you so much for your great answers. It's going to be the last question because of the timing, but dear participants, you can continue to send your questions and they will be answered after the meeting through email. Michelle, the next question is to you. First of all, thank you for demonstrating what technology can do for integrated profitability management. So what system was demonstrated? And the next question, what would be the first 2-3 steps in order to ensure integration in profitability management? So your quick answer, please, Michelle.
All right. So actually, what I showed was, let's say, the front end. What I showed was the SAP Analytics Cloud environment. I didn't really want to point that out because I know there's also alternatives. But very important, and I think that's crucial, the figures that you saw were actually coming directly from the system of record, from the ERP environment. So it was not just, let's say, sitting in a separate data warehouse. Those figures were real time, and I think that's really the most crucial point. So it's the combination of those two. So the 10% in the second polling question, that's basically what I kind of showed. Now, the first steps to go there, I think the very first step, let's say, apart from, of course, yeah, setting up the model, understanding the drivers, understanding the business, but we talked about is really to have a harmonized set of data definitions. I think that's just the most crucial part. Let's say if Monty was just starting from the very first slide he showed, on the very left-hand side, there was basically ROI, return on investment. What does it mean? But even more simple things like what the hell is revenue? Like it can mean different things for different people. So that's the first thing we need to all get under control. It's got nothing to do with technology. Of course, technology can help, right? To capture and to harmonize those definitions. But that's key point number one. The rest will follow later. And I know we're, let's say, out of time, so I'm gonna stop there.
Thank you so much, Michelle, and thank you so much, everyone. Excellent answers, excellent presentations. Please stay with us. We have just a few closing slides before we log off, and then there will be a survey question, so if you can stay with us. Just a quick reminder that those interesting papers that will give you more depth, you can download, and the links are exactly at this presentation, which is attached to this meeting, and it will be sent to you as well. Also, a quick reminder that our future events, October the 6th and October the 12th, it's about another interesting case study, applied materials case study. What is agile FP&A? You're welcome to join, and again, the link is here. And also, there will be another webinar about how to foster a data-driven culture. So what FP&A can do for data management and how we work with data management in order to bring key drivers to FP&A. Finally, I would like to say thank you so much to our sponsor, to SAP. Thank you for being our sponsor and for supporting us in different parts of the globe for our face-to-face meetings as well. I would like to say thank you so much to our wonderful participants. If you have any examples, innovations, case study, you know how to find us. We're always looking for those examples and those case studies. And finally, I would like to say thank you so much to our wonderful panel. Thank you so much for being with us. Michelle, Manti, Bob, great collaboration and great examples. And finally, this is how you can find us, how we can stay connected. Please stay connected, and I will see everyone very soon. Hopefully we will start to travel. Have a great evening, a great morning, and a great afternoon. Speak to you soon. Bye-bye, everyone.
Thank you all.
Bye-bye. Bye, Larissa.
Thank
Thank you. Bye-bye.
Take
Bill,
care.
Bob. Bye.